Welcome to the June Market Thoughts video. My name is Maria Considine King and I'm joined by Brad McMillan, Chief Investment Officer at Commonwealth Financial Network. Brad, the stock market really took off in May. Why? And is it likely to continue?
The stock market really did take off, and I think what's driving that is the market and investors in general are really starting to take the recovery seriously. For the past couple of years, we've had the recovery start, stutter, basically go on a holding pattern for the spring and the summer. We started to see that this year, but then things have picked up again. Things have continued to grow, and people are saying, hey, maybe this time we really do have a sustainable recovery. As you know, I actually believe that's the case, and so the money is starting to move into the market based on the perception that yes, growth will continue, that we really are on a sustainable path. Very possibly that will continue.
Housing is also doing very well with prices 10% above where they were at this time last year. Is now a good time for folks to buy?
When you look at housing, and I would argue housing is one of the key things that is driving the market recovery, you've got to look at a couple of things. First of all, even though prices have recovered substantially from the bottom, they're still well below the previous peaks, and that's a good thing. Second of all, housing remains extremely affordable. The average household can afford not one house, but two houses on a payments basis. Third of all, rents are now more expensive than buying on a monthly cost basis in many markets. Fourth of all, supply is actually at historically very low levels, even as demand continues to increase. So there are a tremendous number of factors that say, yes, the housing recovery can continue and should continue. I think anybody buying today who can lock in historically very low rates will be very happy in 5 to 10 years.
Consumer confidence is at a 5-year high. Could growth actually accelerate?
Consumer confidence is really one of the foundations of any kind of sustainable expansion. And the fact that we're now at a 5-year high is further evidence that yes, this expansion can be sustainable. You got to look at a couple of different things here when we're looking at whether growth might accelerate. First is, where's that going to come from? Consumer spending is more than 2/3 of the economy. Any sustainable growth has to come from there. If you look at consumer spending, wages are rising, and there's reason to believe they should rise faster in the not too distant future. Consumers have not been borrowing. So they can start to borrow. When they start to borrow, that's a significant additional kick to growth. Consumer wealth is back to pre-crisis highs or very close. All of these factors can support increased consumer spending, and that is why growth could very well accelerate over the next couple of months.
With all the good news, what are you worried about?
There's a lot of good expectations priced into the market. There's a lot of expectations that, for example, the Fed exit will go smoothly, that the European problem is solved, which is not the case. I think the most immediate problem to my mind is the Fed deciding how they're going to exit and what that's going to do to interest rates and to growth expectations. The next problem I worry about is Washington, D.C. We've put off the discussion, but we still have not solved the larger budget issues. And third, I think, is Europe. Any one of these things could crack the expectations that are the base of the current market. I still think the real economy is poised for a sustainable recovery, but again, any one of those could slow it down dramatically.
Thank you, Brad.
Thank you, Maria.
And thank you. Please join us next month for the Market Thoughts video.